Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrel Thomas, and today we have the pleasure of interviewing Willem Middelkoop, who is a former journalist as well as a fund manager and the author of the bestseller, The Big Reset. How you doing today?
I'm fine. I just arrived in Switzerland. Might be going skiing today, so it's good that we
Yeah.
can have a chat now, early in the morning.
Yeah. I'm
Late at
curious in your
night, your
thoughts.
time.
Yes. It's all for the love of what we do, right?
Yeah.
So I'm curious in your thoughts on. I saw an article recently on Switzerland and them striking down the wealth tax, and so
The
I was
special wealth tax. Yeah.
I was curious.
Yeah.
I didn't really look much into it, but I figured that seems like a country
Yeah.
I may want to live at some point.
Well, the Swiss, they like society like it is. You don't have that revolutionary mood which you can find in some other countries, and I'm actually a Dutch fiscal person, so I'm based in the Netherlands still. We have a house in Switzerland, but I pay my taxes in the Netherlands. But it's good to see that Switzerland still has some sense of normality and
hmm Yeah, some common sense there, right? So I'm curious, I want to start at a higher level today. So in your book, The Big Reset, you called a lot of like what we're seeing today, and I'm curious in one aspect of your book where you mentioned that the financial reset and the fiat system needing to find a new anchor, and gold has been significant in the news over the last few years. I mean, obviously, central banks buying gold and such, and then there talk about gold revaluation as well as the BRICS, anchoring to
yeah.
a hard metal like gold. And so, just curious in your perspective on where do you see us at in this reset, and how does gold play in that picture?
Yeah, the core thesis of the Big Reset, which I actually wrote around 2013, I revised it a bit in 2015, added an extra few paragraphs on the BRICS alliance. And the core thesis, to come back to that, was always that we needed to move to a new phase of the international monetary system, a phase in which the dollar wouldn't be the main anchor anymore. So the move to the multipolar world, which actually what's happening nowadays. So it's not about the collapse of the dollar or the collapse of the US. It's more that you can expect competition. It's not only about US anymore. It's not only about US dollar anymore. And we're moving away now from this one globalized world into this bifurcation where you have a Western system and you have this BRIC system developing, and the BRIC system will be like a trading system where settlement could be done maybe with gold or maybe with a BRICS currency which called the unit, which might be 40% back to gold. It's still uncertain. Another part of the thesis of the Big Reset that we would need to get debt restructurings and a gold revaluation through market forces or through an action of joint cooperation between central bankers, where gold would be revalued to a much higher level, let's say $20,000, because that helps the central bank's balance sheets. And when I wrote down this thesis, that's over 10 years ago, that sounded like a stretch, but now it's all starting to unfold. We see the current revaluation through market forces. We haven't seen joint actions by central bankers. I expect that to happen when a new financial crisis will get very severe. But that's something, which could happen in the years ahead.
Yeah. So is this gold revaluation, is this like one of the only levers that is left to be pulled? Or, I mean, because it seems like there's a lot of rabbits that get pulled out of the hats. I mean, we had that happen with QE and such, and the many folks didn't know like how long that would last, or that the Fed would, turn to that. And then now we have a dynamic where the deficits and debt is, especially in the U.S., is at astronomical levels, and the Fed has already pivoted on QT and starting QE. And so, I'm just curious if gold revaluation is one of the only levers that's left to pull for central banks and governments.
Well, one could say is that there are not that many cards left in the hands of central bankers, and I was expected they would play the gold revaluation card as one of the last cards. It's like the card you keep behind, because that can really help you in a situation where people have lost trust in the fiat money system, in the international monetary system, and we're in the first innings of that to happen, because if you look at why gold and silver are seeing this rapid rise now, is because there's a huge distrust, not only among investors and the retail audience because of the debasement of currencies, the higher inflation, what we've seen, especially after COVID, since COVID, but we've seen central bankers themselves fleeing towards gold. This is the fourth year in a row central bankers are buying over 1,000 tons of gold, which is massive because world gold production is just 3,500 tons of gold. So when central bankers are starting to flee towards gold, what message does that send to the general public? So I think the next phase to expect is that more and more people are starting to turn paper assets into hard assets, gold, real estate, silver, Bitcoin being the hardest of all. And once this move gets, once these funds flow starts to become too large to almost control, that's the point in time where you can expect central bankers to bring gold back into the system, to send a message to the audience. Look, guys, you don't have to flee out of the paper paper assets, because we back them again with something tangible. But the jury is still out. But if you look at the latest BRICS proposals, the BRICS countries, where China is, of course, in the lead, is turning that way already. Because if you read the latest analysis about the unit, which will be the settlement currency for the BRICS, that points to a 40% gold connection. It shows the way. It shows their line of thinking.
Mm-hmm. Got it. So if, let's say, the card of revaluing the gold does come into play, obviously that means that there's a devaluation of the currency. And so for those that don't hold the metal or any of these real assets, I'm just curious, and what kind of world does that look like for them, right? Because if you think of like gold, I mean, right now at 4,200, and let's say they revalue at 20,000, that's a significant devaluation of the currency. And so just curious in your perspective there.
Well, it's always a redistribution of wealth. And actually, this has been ongoing for the last 20, 25 years. You could almost say 100 years. The dollar, the purchasing power of the dollar lost 99% since the start of the Federal Reserve, which main purpose is to keep the value of the dollar more or less like it is. But even if you zoom in and look at the last 25 years, the purchasing power of the dollar in gold terms went down another 90% in the last 25 years. So currencies, and you see that with all paper currencies, it's not just the dollar, they're all turning down the purchasing power against gold. and you almost reach the tipping point where you have they seem to be falling off a cliff now. If we would be able to show a chart like that, the incrementum guys have built a few nice charts which show all these currencies are the valuation, the purchasing power is falling off a cliff now against gold. So everybody who invested in gold or silver or other hard assets in recent years have done quite well in paper terms. And
Yeah.
I expect that to continue. So people always think it's too late. They missed the boat. No, well, you missed the first part, but you can always go down another 90% and then another 90% in paper terms.
Yeah. Yeah. That's
And
true.
that's what happens in periods of hyperinflation. And I'm not predicting we'll end up into hyperinflation. It could happen, but I think it won't. I don't expect it to happen because central bankers will pull the gold card before hyperinflation is starting to happen. So they know what to do. Central banks aren't stupid. They studied monetary history. These guys know. They know the mistakes of the past.
Yeah. Yeah, for sure. I'm curious if you have any thoughts on there was some recent news with the prime minister of Italy and the political party and leadership in Italy wanting to make the gold of the Italian central bank, the Bank of Italy, the pretty much owned by the state. And so
Yeah.
curious if what does that signal? And I've seen it shared around, social media a few times, but just curious if you have any thoughts there.
Well, it signals that they start to think about gold again, at the highest levels of government. And if you study like how the EU operates, then you have the ECB, the European Central Bank, as this independent central bank body who actually controls the gold held by its members. So when the Italian government says we want to have control back over our own physical gold holdings, which are now held within Banco Italia, the central bank of Italy, and controlled by the ECB in Frankfurt, you see there's some tension building between this, supranational central bank, the ECB, and the national governments. And as I said when I started this answer, it shows that the governments are starting to think about gold again as a major asset which can help them in their national budget and financial situation. While we have had this trend over the last 25 years, especially in Europe, where everything was getting more and more centralized, all the power in Brussels and in Frankfurt with the ECB. Those are my first thoughts when I read the reports about this idea.
Yeah, there's been a lot of talk about the EU being very fragile. I mean, obviously you have multiple nations within the EU, and some of them have more debt than others and such. And I was just kind of thinking about this recent news in terms of like this showing like some distrust within that and some potential cracks in the EU. And so I'm just curious if that's something that you're paying attention to as well.
Yeah, you have these two large trends. One was, if we look on a global scale, one trend was the globalization trend, and now we're breaking away. You have the Western system, and you have the BRICS system, and we're almost on a path of confrontation. I think we started the confrontation part, and so we're moving away from globalization. And if you look at the US, US is a federation, and now you have Trump, and Trump is almost in a direct fight with some of its own regions, like let's say California. California is openly confronting Trump, and New York is doing the same. So the states are in confrontation with the central administration, and in Europe you see same development. You have some of the more populist politicians who, who got a lot of votes. Italy is a great example. You see similar development in Germany and the Netherlands and many other countries, and those more populist parties, political leaders want to move away from Brussels and move away from this very strong government by the EU, by the ECB. And I think this is a trend we see worldwide. It's more fragmentation, it's more confrontation, and it shows we're in this. It actually, the reset, what I call the big reset. Times are changing. There's so many. You see so much changes coming at so many levels, and this is all part of a move away from the system we have known since the end of the Second World War. So the post-Bretton Woods world. It's 81 years later now, and you have this fourth turning stuff. You know, every 80 years you have these big shifts in society. I think it's all connected. It's all part of that.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
You had a recent tweet. I think you were in Amsterdam speaking and such, and you said $500 silver on. It said $500 silver on the screen.
Yeah.
And I mean, obviously, I wasn't in the room, but I just want to know: is that a serious view you hold, or like what was shared there? Could you give us a little?
Yeah,
enlightenment?
This was an event organized by Gold Republic, which is like a Dutch bullion dealer, and I'm an advisor there. And they had their 15-year anniversary, so they had a full house with over 1,200 people in the audience and a few thousand online. And they asked me to do a talk on and I decided to do a talk on silver, which was quite well timed because the evening we did a talk. That was the evening. That was the day silver crossed 60. And you might remember, I'm old enough to remember, I bought my first physical silver over 20 years ago when it was trading $5, $6. Mm-hmm. So we went up 10x in the last 20 years. And most people don't have the mental flexibility to look in the future and see a silver price could go 10x. Well, it happened in the last 20 years. And if you take 10x from the current level, it's $600 actually. And you also might be aware that the gold silver ratio should be 1:10. If you look from a geological point of view, there's 10 times more silver in the ground than gold. And actually, it's almost harder to make a good silver discovery nowadays than a gold discovery. And because silver is used as a commodity in the industry, 70-80% is used before investors can get a hold on it. So I wouldn't be surprised to see a 10-to-1 gold silver ratio again. And that would mean when gold is at 5,000, which we're almost there, 10-to-1, silver is at 500. But I don't expect gold to top out at 5,000. I expect gold to top out maybe around 20,000 in the years ahead, let's say 5 years out from now. And if you do a 10-to-1 then, that's $2,000 silver. And when you know the fundamental shortages, the supply, the production deficits in silver, those numbers could well happen. You know?
Yeah. Yeah, for sure.
We're still
So
early. We're still early, Darrell, in this whole game, in this
yeah,
revaluation. It's still early. And if you then look at the equities, 15%, 15% of our fund, the Commodity Discovery Fund, is invested in silver equities. It's very hard to find good silver equities because most of them are half gold related as well, because there's so few very good silver names out there. And these silver names, their assets, their ounces in the ground are still valued pennies to the dollar. So I think we're very early in this whole revaluation game.
gotcha. So do you see silver being used as because right now the central banks are buying gold, and I do see that there's some news about silver with India and China and such, but then you have this critical minerals aspect of it where it's like necessary for industry, military and such. And so, it kind of seems like silver has morphed into like something something that is that like some huge competing forces there, right? So
yes,
I'm curious
silver was always physical silver was always dominated by, let's say, the gold and silver bucks, who had this very critical point of view on the paper international monetary system. But now it's getting much more, well, almost mainstream. US just added silver on the list of 60 critical metals. That tells you a lot. Russia added silver to their strategic holdings. I think countries like China and India know how important silver is for their economies. Silver is poor man's gold. So with gold trading around 4,000 or 5,000 for many of the more poor retail crowd out there, let's say India, where gold plays a huge role in society, with the marriages, and as gold is given as gift. Many people think they can't buy enough gold at current prices, so they start to buy silver. And silver being used as a commodity in so many industries. So look at the solar panels, and every iPhone has a gram of silver. So silver is becoming more and more mainstream, where it was always like almost a fringe investment. And silver is a given good, which means when the price goes up, demand increases. So the investors, the hedge fund crowds, are starting to look at silver now as well. And it's just such a tiny market. And we've seen production deficits for such a long time. And you could actually say since the 1970s, that's 50 years ago, the silver physical markets have been very, well, tight. We used to have all these silver coins. I used silver coins myself in the Netherlands in the 1980s. It was still, well, quite normal to pay with silver coins. And of course, we don't use them anymore because silver became too valuable. But it means we had all these old silver coins which were remelted and which have been used up in the industry over the last 3, 4, 5 decades. And all that old silver is gone now. So we're looking at the bottom of the barrel, so to say. So I expect some real physical silver stress to develop over the next few months, quarters, years, and that could send silver much, much higher.
Yeah. So in the East, they have it's almost like a culture of real money, hard money, gold, silver, and such. Like you mentioned, India, China as well, and so I'm curious in your thoughts on the West, like, the average person in the West, as far as the accumulation of these metals. Because right now we have an AI bubble, S&P, like a lot of capital's parked into these general equities that are at extreme valuations and such. And right now, I mean, we have gold and silver at all-time highs measured in dollars. And so I'm curious if you have any thoughts on the Western population, the average people positioning into the metals? Like, do you think they're, like kind of far behind in
Yeah.
this case, or?
Yeah, well, as said before, people in the East look more like gold and silver as physical assets, which are traditional owned within the families. Here in the West, we're more focused on financial assets, investments, funds, ETFs. It's almost the end of 25, and then we all look at what investments, which funds, which ETFs perform best. Our fund is up 63% year to date. We're very precious metals oriented, but there's only 50%. The other 50% is critical metals. But if we look at the investment side, when people will look at the end of this year and early 26 at who perform best, then the precious metal funds and ETFs will look very bright. And if you look at general equities, especially in non-dollar terms, we're here in the euro area. And in euro terms, the S&P, the NASDAQ, and the Dow haven't performed well. So I expect a rotation out of the more, let's say, traditional stocks, even maybe tech stocks, which are highly inflated, one could say. A PE ratio of 25, they call cheap in tech. A PE ratio of 25 in precious metals company, that's has a very rich valuation. Look at Newmont and BRICS; they have a valuation of price earnings ratios of just 10. So, from a valuation perspective, even after this huge run in precious metals related stocks, which went up on average 100%, it's still cheap. So I expect rotation out of this general equities into the commodity related, precious metals related stocks. So 26 could be a good year as well. On a general, as a general view, I think we could see more stress into financial markets in 26. Maybe from a geopolitical, the geopolitical tension is rising. I think on average, investors are too complacent and they don't see the risks out there. I was just listening to a podcast in the last 24 hours where they interviewed more than a dozen fund managers, and nobody was expecting some real financial crisis for next year. So that could be the wild card. That we will see the return of volatility, and maybe even a crisis in 26 or 27.
Yeah. Thanks for sharing that. So I'm curious in your perspective and your expertise. I mean, you're a fund manager and you've been an investor for a long time. And so when we have like the big banks, Bank of America, JP Morgan, Goldman Sachs, Morgan Stanley, with these, large, these higher gold price targets, and then requesting like a higher allocation to precious metals. How does that typically play out? Is that like a 2026 type thing where they reposition portfolios and you begin to see more of that demand for the metals, or how does that typically work?
Well, sometimes it's best described as slowly and then suddenly. So you have this first phase when a recovery starts after a huge bear market. We've seen a huge bear market after 2011 till, well, maybe 2020 in the commodity, in the world of commodities and precious metals. So the first recovery, which we've seen over the last, let's say, 24 months, only investors who were in at the bottom enjoyed that ride. And then you get like a first correction after the recovery, and then you get the more serious recovery, which will take years. I think we're about to enter a more serious phase where more general investors are start to move funds into this small space of commodities and precious metals. And when we'll get a second year in which let's say our investment, the commodity related investments outperform, you can expect massive flows into the space. We've seen that after 29 was a good year, 2010 was a good year. After the Lehman crash, the market starts to recover, and then in 2011, lots of money poured into our fund as well. And then we had this huge correction. But I think it might be a bit different this time, because 2009 till 2011 was like the last phase of the bull market of the 2000s in commodities. Now we've had this huge bear market, so I think the next bull in commodities and precious metals, this bull just started, let's say 18, 24 months ago, and it will take years and years. It might even take decades. I'm an avid follower of a technical analyst. He's using the Elliott wave counts. His name is A.V. Gilbert, quite well known. And it's his prediction that this bull market in commodities will run till 2050, 2052, based on his model. And that's his technical point of view. But from a fundamental point of view, if I look at supply and demand studies, not only in silver, but also uranium, copper, you name it, after 2030, we'll see so many production deficits, physical shortages starting to hit the markets. Look at palladium, platinum. Many of the critical metals will be in short supply, but even stuff like nickel or as I said, copper, and even zinc could see stress in the physical market. So it's not that difficult to envision a bull market which will take decades to unfold, not years to unfold. And if you combine that with a big reset and the big monetary, the large changes coming to the monetary system, and gold being reintroduced by the BRICS alliance, I think a lot of investors I used the word before, don't have the mental flexibility to envision this huge rally, which will take decades to unfold. Like real estate. Real estate was a bad market, especially in Europe around, let's say, 1980, also in the US, because interest rates were so high. And then you had this bull market in real estate, which actually took 40, 50 years. We had a very long bull market in general equities. And people in our industry, we're all children of the bear market. We've been so depressed over the last 10, 15 years. My worst decision was to start a commodity fund at the top of the last cycle, which was 2008.
Yeah.
And I always tried to tell our team that this could take years and years to unfold on a positive spiral.
Yeah, it takes a lot of conviction, and obviously that's paying off for you now. So just before we wrap up, I know you have a little bit of time, running short on time. I want to get your just outlook on Bitcoin. Obviously, Bitcoin, there's been many charts coming out about it being the worst performing asset in the last year and such, and I know that you view that as a hard asset. I own a little bit of Bitcoin. I have my criticisms as well. I mean, I don't think there's no perfect asset out there, but just curious in your perspective on Bitcoin and how you see that in this picture.
Well, you always, if you have some extra funds available, and especially people are a little bit more older or have a bit more net worth, you always should spread your assets and diversify. And I think Bitcoin has been the fastest horse in this race in the last 15 years. So if you haven't owned it over the last 15 years, maybe you didn't take the right decision. I still expect Bitcoin to be one of the fastest horses in this race going forward. Bitcoin hasn't done that well in the last 12 months, but that's why it's so important to diversify, because Bitcoin did very well in 24, late 24, early 25. I remember well the last bottom not that long ago was 15,000, and now people are complaining we're trading around 90,000. I expect Bitcoin to move to 1 million before 2030. I've tweeted that before. And so it should be part of the mix. And when you have just a few percent of your assets in Bitcoin, it can make a huge difference. And I use it myself that way. We use it in our fund that way. We just have a few percent in Bitcoin, because next year we could have a correction with gold and silver, and Bitcoin might do well. So it helps stabilize your overall returns. And for me, Bitcoin is still, I coined it virtual gold in the big reset, in the Dutch edition in early 2014. I was stupid enough not to buy it myself because I thought I have the real stuff. But I corrected that mistake in 2018, and I'm happy since.
Yeah. You've made some significant gains. I already know. So appreciate you for coming on the show, William. Looking forward to seeing you live at VRIC at VRIC, and so happy to meet you in person.
Likewise.
And so, where can folks connect with you, follow you? Read some of your work.
Well, my account on X is the most important point of communication. I'm quite active there. It's all for free. I have a Patreon account for people who want to dive a little deeper in all this reset stuff. I got fed up by giving everything away for free on Twitter. I don't need the money for the subscription on Patreon, what people pay on Patreon. But I think it's more like a show of respect that I spend a lot of time, thinking, analyzing, and even writing about this. So, and of course, we have the Commodity Discovery Fund. Our fund doubled in size. We have 200 million assets under management now. That's in euros, and we're always happy to talk to new investors. We're open to investors worldwide, although our main focus is the Dutch-speaking countries. But our website is bilingual, so happy to talk to anybody.
Yeah, that sounds good. Well, looking forward to seeing you at VRIC. You all have the information to connect with William. And thank you for coming on the show. Everyone, be sure to click the link that's pinned in the comments below. That is to the Vancouver Resource Investment Conference. Get your tickets. Love to meet you there in person and to connect with you. And hit the subscribe button if you haven't yet. And thank you, William, for coming on, and look forward to having you back sometime.
I really enjoyed it, Darrel. Great meeting you here. Thank you.
All right. Thank you.